I'm very excited to be talking about the Bitcoinization of Finance. This is a book I wrote, and it was crazy. I was at a wedding the other day, and nobody cared I wrote a book about Bitcoin. Fortunately, that's not the case with you guys in the room. So I'm excited to talk about this. I don't think you see a lot of this conversation in the ecosystem. There's obviously a lot on mining, a lot on economics, and so this presentation will kind of focus more on like the financial angle of Bitcoin. So I'm Wyatt O'Rourke. I'm the founder of Basil Financial. We're a Bitcoin-focused wealth management firm. I'm the author of the Bitcoinization of Finance. I'm the CMO of The Space. I'm a father, husband, and Christian. So first thing, I'll give Bitcoiners their flowers. What Bitcoiners get right about finance, like admittedly a lot. But it's important for us to understand money is the base market and it's manipulated. Every other market is on top of it. So when a market distortion prevents individual participants from making informed economic decisions, we have to understand that we're working with a nefarious system that incentivizes gambling and not capital allocation. Centralized money is subject to the will of the centralizers. As users of money, we should not be subject to political influences, and over-financialization is bad. There have been, numerous instances of financiers, pushing over financializations to extremes and, exploiting the fiat financial system and those closest to the money printer. Certainly not on board with that. And, this is, something we hear a lot, in Bitcoin circles. However, what Bitcoiners get wrong about finance is that every industry, I say, is susceptible to fiatness. And I kind of, generally think of, finance as the, business of money. And kind of my main, motivation for writing this book is Bitcoiners give me a lot of crap for working in finance. They kind of view me as like the bad guy. I was like, no, trust me, I'm on your side. Like, we could do this. And so, fiatness is pervasive. It makes its way into every industry. Finance is, not also susceptible to that. And I would say it was primarily susceptible, just given the intricacies, of being the business of money. One of the things I get most frustrated with Bitcoiners is there's really no reason to have, qualms about, financial products. An options contract, for example, is just two parties taking either side of a trade, right? That is a general, business contract that we can then, apply Bitcoin to. I think, what they do a lot is they conflate the unit of account, with the industry. And so that's something that we need to do a better job of like separating the two and understanding how finance can help us. So how do we achieve Bitcoinization? Well, I would argue it's through finance. Applying traditional financial tools, products, and strategies deepens Bitcoin capital markets. And I'm not here to defend everything the finance industry has done. I merely want to point out how finance can help Bitcoin. But deeper capital markets are simply a function of capitalism, right? We have two parties that can take either side of a trade, and that trade can be, multiplied into more trades. And that is a good thing. Deep, robust capital markets are a good thing. Ultimately, this is about getting dollars into Bitcoin. And a lot of times that's not as easy as just buying Bitcoin. There may be certain, insurance companies or pension funds that have, admittedly, potentially self-imposed, mandates. But they can't just go out and buy Bitcoin. So we need to, engineer investment products to get exposure to Bitcoin based on, each individual's or institution's unique situation. So kind of back up here and kind of understand, how we set up a Bitcoinized financial system. And first I want to understand, gold and scarce assets, scarce commodities. And, I say gold walked so Bitcoin could run. Sound money is good for humanity. It's kind of my working thesis that the peak of any society is when the money was the most sound. And, I think you can kind of tangentially go back and look at great empires and then, Rome, there's like some great examples on Twitter of, like the denarii kept getting, smaller, and then it was actually copper instead of silver. And, we can kind of almost overlap that, with the pinnacle of their, achievements. So gold did a good job, but didn't do a great job. Lynn Alden does a great job explaining this in her book, Broken Money. Money is a technology. It will have technological evolution, as humans continue to evolve. She uses a great point, so it's like gold, a lot of great sound money aspects, but with the invention of the telegraph, information could be transmitted at the speed of light relatively. And so, a ledger could be updated at the same time in London and New York, but the money, gold itself, couldn't travel that fast. And so now we see the invention of paper money, which was a technological evolution to gold as money. Scarce real world commodities and paper are incompatible because there's an inherent technological schism, right? It's like we can't transmit paper as fast as we can we can't transmit the scarce commodity as fast as we can transmit paper. So one is scarce and can be digitized. The other is abundant one is scarce and cannot be digitized, this is gold. The other is abundant and can be digitized, which is paper. And I think this means that all early fiat currencies that were backed by a scarce commodity were doomed to fail, and we have since seen them fail. And then ultimately what happened is gold got financialized. Gold actually ends up moving backwards down the currency maturation cycle. And so that's store of value, medium exchange, unit of account. This is what we're all hoping, Bitcoin continues to evolve on. However, what we see with gold and paper, where that products and services used to be priced in gold, so it was a unit of account, and then that wasn't very practical. However, gold was still used to transact and exchange value, so it was a medium of exchange, but even that became infeasible. And ultimately, gold is no longer money, it's just an asset. It's just a store of value, so it has 100% financial value and 0% monetary value. A la the Bitcoinization of finance. So Bitcoin flips the script. It's a scarce store of value asset, so it's money with an enforced fixed supply. It's self-contained with a native digital currency. It transmits and settles transactions peer-to-peer without an intermediary and has built on a standardized unit of account. So Bitcoin is the next technological evolution of money. The technological schism between gold and paper does not exist with Bitcoin because it's a digital native bare asset with sound money principles. And Bitcoin does not require a secondary currency layer. It's all built into one. I believe Bitcoin's super feature is the ability for its users to natively custody the asset themselves. And I think this is extremely important, especially as I get to how that affects the financial system, because it makes Bitcoin very anti-fragile. And markets more true and accurate and helps prevent market manipulation. And so I think hyper-Bitcoinization works if Bitcoiners can build a financial system where the asset, Bitcoin, actually settles and trades in kind. And this is kind of the important thing to focus in on here. And so if we go back to, gold example, people have been, kind of sounding the alarms that the gold markets are manipulated for decades now, and this is all through a financial tool called futures. And so you can have paper futures on top of scarce asset gold, and in theory, there's nothing inherently wrong with that. But 99.6% of gold futures settle in cash and not gold, so you're not actually settling the underlying asset. So if you issue financial paper, you must custody, settle, and deliver the asset. End of story. Bitcoin then makes this possible because there are some physical limitations of settling gold. It's heavy, you need armed guards. And so we can kind of be charitable why gold's not practical to settle, but then we get all these market manipulation forces that skew the end user's perception of how they're allocating their capital. So settling for anything less than this can still make a Bitcoinized financial system subject to misaligned incentives. Fortunately, given Bitcoin's internet native features, we can actually settle the asset in kind. 10 minutes, it can be settled around the world. And so we're actually trading the underlying asset at the end of each trade. And now I think it's our duty as Bitcoiners to build financial solutions, products, and services and strategies within the ethos of Bitcoin. And this is a tremendous opportunity for us to remove the fiatness from finance. So I want to lay out kind of a blueprint for free markets here. And so I don't believe we actually live in a truly, capitalistic society because, like I was mentioned earlier, the money, the base market is manipulated. And I think, every feature of the US dollar, which acts as a world reserve currency, is either intentionally or unintentionally distorts the market for money. And no system with unbalanced incentives can grow like this. It's unnatural. And we're kind of starting to see that, fingers crossed, unwind. So true capitalism is about the voluntary exchange and competition. And I think what we're really seeing here is like people are craving like a return to truth. And I think Carlos just did a great example emphasizing how Bitcoin, one of the ways Bitcoin can help us do that, because humans are not meant to function on constant uncertainty. We're just not wired that way. And so Bitcoin fixes this by providing a transparent system where the integrity of market signals are preserved. Users are able to act based on unfiltered information. There's maximum transparency that creates clarity in the marketplace, and that empowers people to make informed economic decisions as opposed to gambling with their money. So moving forward, I think it's extremely important that Bitcoin's proof of work model forces discipline and capital allocation in a way that a fiat-based system never could. And I believe a Bitcoin-based economy will take capital-intensive and energy-driven build out. And Bitcoin's fundamentally alters capital dynamics as a store of value benchmark for returns and a hedge against debasement. So what do I mean by that? Well, Bitcoin can improve a company's capital stack by retaining equity and removing the need for debt-based financing. So you have a more sustainable, low time preference mindset, and anything worth a damn, like you can't build quickly. Like we've seen and heard from many of the great speakers today. It's like you can't cheat Bitcoin, and this is ultimately going to be reflected if we think of Bitcoin and money as a base market on every market built on top of that, including public companies or real estate or whatever you want to be investing in. What I think is particularly interesting that Bitcoin has an opportunity to do is set the new risk-free rate. I also went to a higher ed institute, refer to it now as a woke-free education camp, where I got a Keynesian finance degree and spent a bunch of money going into debt. And it's like, wow, a lot of good that did me, So I did unlearn that, learn Bitcoin. It was a costly mistake, but we're here anyway. And when I was in school, I was taught the risk-free rate was 2%. And you never question that because, that, one time was the, kind of 30-year, treasury, rate. And so you just blindly put in 2% for your weighted average cost of capital. And that's how you modeled any sort of economic, or financial, decision you wanted to make an investment into. However, I'm obviously very bullish, and we'll kind of get into some of the nuances of the sub-industry of Bitcoin financial services, but I'm very bullish on Bitcoin collateralized lending. Because debt markets are very important markets in finance. And so what I think we're going to see here is the interest rate charged on Bitcoin collateralized loans will actually serve as a market signal for the perceived risk of Bitcoin volatility. So you have a bunch of companies going to the free market, offering loan and origination services, and what they're willing to charge their interest rate at will then be a reflection to the entire market that this is the new risk-free rate. So this is kind of like the minimum, investment you could get in a Bitcoin collateralized endeavor. Very exciting. So I really kind of exploring this idea and very excited about this idea of diversifying within Bitcoin. And this is kind of gets back to what I was saying. It's like sometimes just buying Bitcoin, isn't an option. So our action that we can take as financiers is the development and integration of TradFi products into Bitcoin that allows investors to diversify into and within Bitcoin. I think a great example of this is Bill Asset Management. They're out of Seattle. They have a private credit fund that purchases Bitcoin collateralized loans. So if I'm a pension fund, let's say, CalPERS, the largest pension fund in the United States, that is the pension fund for public employees in the state of California. They have certain investment mandates where they can't make quote unquote risky, and a bit of a side tangent, risky investments because they have an obligation to their pensioners to return a certain amount of capital so they can retire on that. It's like, well, they may not be able to invest directly into Bitcoin, but they can invest in Bill's private credit fund, and ultimately that underlying exposure is Bitcoin. And so the outcome of this is, unlike speculative, high leverage environment of past cycles, a broader institutional investor base with a wide tool set, I think can smooth out market fluctuations. And these developments and their unique value propositions open up all kinds of new opportunities to obtain Bitcoin exposure through Bitcoin-backed investments. And this is ultimately what deepens Bitcoin capital markets and makes them more robust and resilient. And I think, like I said, this improves price stability, which allows more capital allocators and dollars to enter Bitcoin. So this is now we're kind of starting to see the blueprint for how we achieve hyper-Bitcoinization through finance. So here's some real life applications that have already been launched and are on market. And I give these entrepreneurs a ton of credit for going out in the world and building these tools, products, and solutions for the larger finance industry. And we all are beneficiaries of this. I specifically benefit from my role, my day job. As an advisor, I now have more tools and ability to help my clients, which are predominantly Bitcoiners, achieve their goals. And so we have Bitcoin collateralized loans, we have interest payable in Bitcoin, we have Bitcoin denominated life insurance, Bitcoin IRAs, Bitcoin HELOCs, mortgages designed for Bitcoin holders, trust designed for Bitcoin, Bitcoin private credit funds, Bitcoin ETFs, Bitcoin treasury companies, Bitcoin SMAs, and Bitcoin futures. I'm biased, but I think Bitcoin financial services is the most exciting industry to be in right now, because there's a ton of opportunity to service a loyal, growing, and wealthy client base that already has an existing playbook. Nothing I mentioned right here is like a new product. These are all things that exist already in the marketplace. They're just being applied to Bitcoin. So you don't really have to rethink the wheel. So where are we at right now? So I'm kind of dubbing this the fiat denominated returns on Bitcoin exposures market. And I think this is a really unique moment in time. I don't think this will last forever. As we transition to Bitcoin being a unit of account, this will be a moot point, but we're not quite there yet. But this is a very lucrative and exciting time because I think this is the second largest return opportunity in Bitcoin's life cycle. So the biggest being the store value, getting and owning and purchasing bear asset spot Bitcoin. But as we move along the currency maturation cycle, the second being between store value and medium exchange, which I think we're at right now. And as we progress, that investment opportunity and those return opportunities will get less and less because everything will be priced and denominated in Bitcoin. What this ultimately comes down to is this fiat denominated returns on Bitcoin exposure is how synthetic your exposure is to Bitcoin. So as a product builder, your competitive advantage is having the least synthetic exposure. And as a product consumer, your tolerance for synthetic exposure is to achieve your desired goals, target returns, or speculation. So we have products, strategy, their preferred stock is making a lot of buzz right now. And so when we think of a public equity that owns Bitcoin as a potential investor into strategy, how synthetic is our Bitcoin exposure, specifically for like preferred stock? Well, it starts with the common shares, and one of their preferred stock options, Saylor, brilliant guy, he made the tickers like the same thing, so they're very hard to remember. But one of those preferred dividends is paid out in common shares. So if you're a common shareholder, you could be diluted for the company to service those preferred shareholders, or you could be diluted as they issue more common shares to buy more Bitcoin. So in that investment vehicle, as the end user investor, your exposure to Bitcoin is extremely synthetic. However, in the case of the private credit fund, that I just mentioned, that is much less synthetic because there's only one or two layers between you as the investor and the underlying Bitcoin. So where are we going? Bitcoin on Bitcoin returns. As we all know, Bitcoin doesn't have yield. If anybody tells you that, they're probably lying and it's a scam and you should run the other way. And at the end of the day, Bitcoin is just money. So I think this is a moment in time as well where we care about dollar-denominated returns in Bitcoin. But in the future, we'll care about Bitcoin on Bitcoin returns. And this is much harder to do given Bitcoin's scarcity. You have to be much more intentional and disciplined with your capital allocation. And there was, a prominent investment or Bitcoin company that wanted to start a private credit fund, so similar structure. However, it was fully denominated in Bitcoin. So let's just walk through how that would work. You have to raise Bitcoin from investors, relatively easy. You have to make loans in Bitcoin. That's kind of a medium. But then you have to find companies that need a loan, understand Bitcoin, and have the potential to pay back that loan in Bitcoin. Well, that's very hard to do. And then ultimately that return would be passed on to investors. So this is all in the ethos of working with a scarce asset. Is you had to be extremely intentional and diligent with your capital allocation decisions. So our responsibility is to build our industry, and this is, I think every industry in the ethos of Bitcoin. I think it's incumbent of us all, regardless of what field we work in, to make sure our business and industries embody the ethos of Bitcoin. And that will take the shape in many different forms, and it's up to us to identify that in our own industries. So, in finance, I think that looks like, proof of reserves, transparency. Do you support self-custody? How are you settling? How synthetic is that exposure to the bearer asset? I think it's extremely important for us. This is something I spent a lot of time and effort. My firm is supporting Bitcoin-only businesses. It's very important we work with each other and that we hold ourselves to a certain standard, which ultimately benefits our clients and customers. And I'm advocating for the Bitcoin industry, specifically in finance, to self-regulate, to maintain trust and avoid excess government intervention and uphold the ethical standards without bureaucratic inefficiency. And so if we, as industry participants, act with the principles and spirit of Bitcoin, we are incentivized as individual nodes within the broader community and society to hold each other accountable. And I think there's many industries, in the past, this isn't like a new idea, that have taken this, extra burden and responsibility upon themselves to do. So, as a Bitcoin financial advisor, I don't recommend my clients use Coinbase. I then send them to Strike or River. And, if we all maintain and decide to do business with companies that we think are doing things the right way, doing things the Bitcoin way, we will then end up self-regulating ourselves so we don't get this top-down regulation. The regulation happens from the bottom up as a community. So I want to talk on Bitcoin's full potential here, because who doesn't like some price speculation? And I should caveat, as a licensed fiduciary in the state of Colorado, this is not financial advice. It's purely for educational purposes. Thoughts and opinions are my own, and not the... But ultimately, like I mentioned, money is a market. And so we see at this top line, Bitcoin is a scarce asset that has, appreciation potential. That bottom line, we have depreciating assets. It'd be something like a vehicle. And so assets are in competition to attract money, and the assets with the best value proposition will attract the most money. And these are charts both published by Jesse Myers on Once in a Species blog. He's a tremendous Bitcoin writer and researcher. If you haven't checked out his work, I highly encourage it. But Jesse estimates global assets represent about $900 trillion in value. And so we can kind of think of this as Bitcoin's addressable market. Bitcoin being about $2 trillion. It's hard to see. It's a little blue square. We're hoping that one gets bigger. if you're struggling how to figure out this graph. And so his ideology, so Bitcoin consumes 25% of the world's value. That puts Bitcoin roughly at a $225 trillion market cap, or roughly 10.7 million per coin. The Bitcoinization of finance makes this possible. To bring it all back, in order for Bitcoin to consume and take dollars from real estate, to take dollars from equities, to take dollars from fixed income, we need to build the products that support Bitcoin to do so. Also want to plug, we mentioned this at the space. If you're interested in Bitcoin financial services, if you're interested in pushing this industry forward, we're hosting the Bitcoin Financial Services Summit at the space. This is an opportunity for RIAs, CPAs, asset managers, estate planning attorneys to all get together, learn from each other, push the industry forward. And with that, I think we good on time. We had some questions.
Would you consider, so I think it's Amboss, running, when you put money in a Lightning channel, you can actually earn Bitcoin on Bitcoin return. You have thoughts about that one?
I think that would qualify as Bitcoin on Bitcoin return because you are earning, a fee in Bitcoin for routing transactions. Yeah, it's a great question. So I think one of the reasons why we're seeing interest rates come down is there's just more servicers and originators coming online. So there's some free market principles of driving interest rates down. I hope collateral requirements don't come down. The average loan, generally is about 50% LTV. A little easier way to think of that is 200% collateral to principal. So if Bitcoin's 100,000, and I want a $100,000 loan, I need to pledge 2 Bitcoin as collateral. Bitcoin is still volatile. There's a company called OnRamp. They published a great research report that there is more good volatility in Bitcoin than bad volatility. So there's more upward aggressive price movement than there is downward. However, what I really like about Bitcoin collateralized loans is it's actually kind of this old idea and structure where you pledge more collateral than what you're actually taking a loan for. And I'm very excited that's been brought back to Bitcoin. So my concern with higher LTV loans, so if we have an 80% LTV loan, we need to put less in collateral. Ultimately, I think that puts the end user at risk because if there is an aggressive price movement and Bitcoin volatility to the downward pressure, you have a higher likelihood of your Bitcoin being liquidated. And when we're utilizing these tools, ultimately up to the individual, but a lot of times it's to satisfy dollar-denominated liabilities or acquire more Bitcoin. And we want to make sure end users are preserving their Bitcoin. So I would actually think, a higher LTV loan would require a higher interest rate because there's more risk associated with that. But great question. Yeah. There are some larger asset management companies doing this. Samara is the only one I know doing this on a Bitcoin return basis. But ultimately, those products are still very hard for the average Joe to enter. You actually have to have 5 million in liquid net worth, be investor in their fund, and it's a higher fee structure because it's a more complex investment strategy. But yeah, they're doing some work on that front, specifically on futures, but some on strategy.
Bitcoiner investment advisor, how do you see shared responsibility RIA personally invest in Bitcoin without run on
Yeah, so a lot of times some of the larger RIA shops they have we have a very heavy compliance duty. The most gracious I can be for that is it is with the intent to protect consumers. I don't know if it always does that. And so as a fiduciary, I actually have a lot of flexibility to identify what's best for each individual client. I think it's my fiduciary duty to mention Bitcoin to all my clients because it's best returning, asset over the last 10 years on top of its, sound money principles and the sovereignty angle, of holding Bitcoin as well. But ultimately, as fiduciary, you do have a lot of responsibility. So unless a firm, an individual RIA or financial advisor is kind of kneecapped by their compliance department, I would say they're probably making an excuse on why they're not talking to Bitcoin about their clients.
You think companies are transitionary and don't need to just way down the line? As a non-finance guy, okay, the lending is useful. Tax financial services, that's a prerequisite for like a tax rule. The public markets and stocks, I think that's a lot of gambling. So any commentary on that, like, will some new ones come about, some fizzle out?
Yeah, I think there will be, a lot of products that are built today that are pertinent, 50, 100 years in the future. And that's all kind of within the greater idea that in this moment in time, how do we get dollars into Bitcoin? And so once the dollars are in Bitcoin, those products might not be pertinent anymore.
You risks to the Bitcoin, paper Bitcoin, and given that it's massive, and applies to the financial world, because to me there is a mutual.
Yeah, it is a great question. Thank you, Mark. I think Bitcoin or paper Bitcoin is an extreme risk. And that's not something we should tolerate as individual investors or investment professionals in the industry. Certainly no fan of BlackRock, but I have to give them a lot of credit. They actually file with the SEC to have in-kind redemption with their ETF product, and that is a huge move because even the threat of in-kind redemption forces them to be honest with how much Bitcoin they say they have and how much ETF paper they're issuing on top of that underlying Bitcoin. So there are ways we can be diligent, and it's our responsibility, and that's kind of my call out at the end is that we need to be extremely diligent with who we decide to work with and if they're doing it the right way. I definitely like to see proof of reserves. I know Bitwise publishes the address for their Bitcoin ETF, so each one of us can actually check and make sure they have as much Bitcoin as they say we do. So that's the Bitcoin ETF I actually tend to steer people to because I think they're doing things within the ethos and principles of Bitcoin. That answer your question?
You see as a correlation between the growth of the dollar and borrowing against cash.
It's very interesting. So I kind of like mildly, interested in mining, even though I give miners a hard time. You guys do good work securing the network. Thank you. Hash rate also is a commodity that I think can be traded and should be traded. I think this actually provides, especially mega miners with a lot of resiliency and flexibility with their balance sheet and cash flows. And there's of course, I'm going to forget about the name of it now, but there's a CTFC regulated exchange in Chicago. It's BIT something like every Bitcoin company. They actually trade hash rate futures. However, with them, they made the intentional business decision to not settle those futures in the actual hash rate. which is certainly possible. That hash rate could be, pointed at a pool, and that investor, could then, receive the payout from the pool proportionately. So on the forwards side of things, it's a little easier. Luxor has actually developed a pretty cool forward marketplace for trading, hash rate, and that hash rate actually settles. So that hash rate is traded to the counterparty.
Appreciate. So you said you're not a fan of ETF as a big, big. How can you collateralize back big, big?
Great question. It's because with that 50% LTV, which is kind of like the industry standard right now, that Bitcoin is actually over collateralized. It's putting more Bitcoin in than dollars that are being lent. And a lot of times too, and I do think this is a point in time, so it's a good caveat. It's very hard for Bitcoin loan originators and servicers to get dollar liquidity. They oftentimes can't go to a regular bank that can print money. They're forced to go to like the private market, and those private dollars are raised by individual investors. And so it's not new dollars entering the system, it's existing dollars that have been allocated and invested in this opportunity.